today's video, I'm going to share something really cool with you that is a very useful tool that you can use for trading. It's more related to crypto specifically, and it's almost kind of like a cheat code that allows you to get much better entries, stop losses, and take profit targets. Now, what this is a lesson from my intelligent trading course based around liquidation maps, what they are, how to read them, and how to use them to your advantage when trading futures and spot positions with crypto. For a limited time, I'm running a special offer with 50% discount on the trading course. The link is in the description down below. So if you enjoy this lesson, there's more than 50 other ones in the course in this kind of format where I break down these concepts, strategies, secrets, tips to be able to help you get more success from trading. So without further ado, let's dive straight into the training and get started. In this video, I want to explain liquidation maps, how they work, and how you can use them almost as a kind of cheat code for better position taking with your futures trading and perhaps even with spot trading. So before we do that, what is the concept of trading with leverage specifically? You have an entry, right? You have a stop loss, and then you have a take profit target. Okay, those are always the case with trading. Now, a lot of traders do end up getting stopped or getting liquidated, right? The stop loss is one thing, it's voluntary that you can put in, but with any sort of leverage position, you also have the liquidation level, right? And when that gets hit, because you're working with borrowed money, at some point, if the price moves against your position too much, they're going to liquidate your position because your margin is gone, okay? So let's just say we're here in a downtrend, we're moving up, someone decides to take a long entry, so we got the entry over here. At some point there's going to be like a stop level and there's going to be a liquidation level, right? But then there's also going to be take profit levels. Now, most traders, because they don't have the knowledge and they don't have the system and they don't have an understanding of how this works. I'm talking about retail traders, specifically people, who sign up for a trading account and want to treat it as a hobby, but they don't really know what they're doing. So that is where the price action is always designed to trap those traders, to bait them into taking positions at exactly the wrong specific times. Okay, and they'll get people to short the market at the very lows, and then they get liquidated there, and they get people to take long positions at the very highs, and then they get liquidated there. So what can you do about this? Now, besides all the training and concepts here in the course that you can use to help you, specifically regarding liquidity in terms of taking out previous lows, in terms of taking out previous highs, in terms of market structure break, like when it breaks, it comes back below, Fibonacci golden pockets, and so on and so forth. This is specifically about tools that exist that show you the liquidation levels, large clusters of traders using high leverage, and why the markets gravitate towards this. And this is specifically oriented towards crypto because that availability is just there in a much easier way. So what I'm talking about is specifically something that looks like this. Maybe you've seen it. If you're part of my VIP program, of course, you've seen it in the Discord because I share these regularly. What this is a visual representation you can see of Bitcoin in this specific case, where you can see it's the liquidation map. What that means is you have the price scale here at the bottom going from 23.6 to 29,000. The dotted arrow here, the dotted line with the little arrow at the top, the red, that is the current price at the time this map was published. Now keep in mind, people are always opening and closing positions, price is always moving. So a liquidation map from the day before might not be relevant anymore, even from 2 hours ago, depending on when it is, okay? So this is a tool that shows you liquidation clusters, what would happen if certain high leverage positions that have been opened, if the price moves there, they hit the liquidation levels. So, for example, because there are still cryptocurrency exchanges that are offering 100x leverage or sometimes even 125x leverage, that means with 100x leverage, if the price moves 1% against that position once it's opened, it gets liquidated, okay? It automatically gets closed and the margin allocated to that trade gets wiped out. And the exchanges do this, of course, to protect themselves, right? So Based on those calculations, I'll get into the documentation specifically how this works, and I will link you to that down below if you want to read more and dive into it, how it works. But basically on that, these tools can use that information based on the liquidation orders and the market orders that are placed there to kind of aggregate the amount of positions that are open. So in this case, you can see the largest cluster over here. If the price were to move just $300 up, it would liquidate those leveraged shorts. So people who are chasing the price will open 100x or maybe 50x, 75x, but usually it's 100 or 125x. Those leveraged positions, the price moves against them, it wipes them out. And the same to the downside. You can see here where the largest clusters lie, all the way down to 25.5. So it doesn't necessarily give you any information on what is about to happen specifically based off this chart, but it gives you those clusters and those levels. And then you can use your technical analysis tools that I teach in the course to look for confluence around about those levels. Because the market makers tend to just want to grab these liquidations as much as possible, and that's why you see these scam wicks. It moves, it clears the cluster, and it moves back down. So how you use these specifically is you can use them to be aware of where the levels are, and then instead of trying to enter anywhere randomly here in the middle, hoping for a move left or right, you can use these as either your take profit targets. So for example, if you were long from earlier on, you could set your take profit target for shorter term trades right about here, 27.8 or so, which would mean it lines up with the liquidation cluster. So as those people are getting liquidated, you can simply close your position there for a profit. Or you can do the inverse. If you are not in a position and your analysis on the charts tells you the higher time frame might be looking for a short position and you're looking for that short entry, you can wait to see if that cluster indeed get liquidated and use that as your short entry. So instead of entering short here, where the price is much more likely to go and clear that cluster and move up against you with another $200 or $300, you can simply wait and try and take a short position instead of at the current prices. Maybe try and take it into the majority of that cluster, obviously lining up with your own analysis of the charts, and then get a much better entry rather than getting liquidated. And if you were to take a short, for example here, when this cluster gets cleared, you get a nice entry, then where's your take profit target? Well, probably right here after the majority of this cluster of longs gets cleared over there, and you can take profit into that. And this is how you can use this to your advantage, obviously in confluence with analysis on the charts. You can't just trade purely based off these liquidation maps, and obviously it takes some experience to get used to what is happening, which time frames, etc., etc. But this is a very, very useful tool. Okay, so that brings me to the next point. Where do you find this information? Well, there's a couple of them I will link down below. There's a couple of platforms that offer this as a service. Some of it is free, most of it is paid, as it is premium information, because obviously they have costs to be able to continue to aggregate and get the data and run their servers, etc., etc. So one of them is the Kingfisher. I will link to it down below. You can see their website. They have all sorts of information, not just on Bitcoin. They also have it for Ethereum and different coins. And this is just a good product, okay, in my opinion. Now, it is a paid version. If you are serious about trading and you are trading with large capital, I would recommend getting the premium version and simply paying for it. It's really not that much. I think it's like $80 a month or something like that, $50 to $80 or something like that. And it does give you that information available on demand. Now, if you are obviously just trading smaller, or you're not doing this very seriously, the nice thing is a lot of people actually share this information for free, including actually the Kingfisher on their own Twitter account. Not all the time, not every single day, but if you follow enough people on Twitter, you will see them sharing this information. So the Kingfisher.io is one of these platforms. There's another one called High Block Capital. It's very similar. They just have a different kind of design here versus the Kingfisher, you can see, but it's the same thing. It's various liquidation maps and clusters and how that works. You can sign up for that down below if you wish. And then there's another one, which is simply CoinGlass, which is the one that I showed you earlier that I made the explanation on. In a similar way, it's also there. You can see over here the cumulative liquidations and the various clusters on the pricing. this also has a pro version that you can pay for. So again, if you do trade with lots of capital and you are serious about trading, I would recommend just signing up for the paid version. And if not, like I said, you can find this information for free. So for example, the Kingfisher, they have a free Telegram group, Telegram channel. You can see the official one linked on their website, which means you can just join that, and inside there's members who are sharing these charts pretty regularly. Also, if you go on Twitter, you can follow the official Twitter account here for the Kingfisher, and they share pretty regularly like updates on various levels. But again, this is obviously only when they feel like sharing it. And if you're in need of that at a specific point in time and they don't share it at that time, obviously then the paid version is better. So we have the Kingfisher. This person, Dan Crypto Trades, they also share it pretty regularly. So they're an account worth following. IT Tech also, you can see he shares it pretty regularly here. The Kingfisher maps over there. And then Crypto ISO. I will link to all of these down below so you can follow them if you wish. So one thing that's interesting here, I want to give you an example of this in action here on the Bitcoin chart. This is an hourly chart, and actually I wish I could have just shown you this without the move up first, because what we have here is that liquidation map that I showed you here. Okay, so at 26.5 already, you can see the cluster over here was, the majority of the cluster is here. You can see the big part to about 26.8. Sometimes it can go a little bit further. But if you're looking here on this chart, okay, and let's just say we were here at 26.2 already, we have that liquidation map showing the cluster to 26.8. Now, without looking at that liquidation map, based on the concepts that I teach in the course already over here, you could see that this circled level over here is liquidity. A lot of people are betting to the downside and placing their stops right about just over these highs, right? So you will notice this, the more time you spend with charts, you will automatically see these highs and lows, and the price tends to gravitate toward them, going above them, going below the lows, going above the highs, just to take out those leverage trades. By the way, if you do need an exchange to trade crypto futures with leverage, if you are not based in the US, you can use either BYBIT or BitGet. The links are down in the description below. If you use my links, you will get maximum deposit bonus campaigns. These bonuses are usually not available if you just sign up direct through the exchange. So if you use my link, you will get that maximum benefit. And this is where the liquidation maps come in useful, because you can use your knowledge of charting that I teach in the course and combine that with the liquidation levels from these tools, and then you just have more confirmation, more confluence in what you're doing. And usually it depends on the market conditions. Like as I'm recording this video right now, we've been in many months of bear market. There's very little volatility. So what we're seeing when these moves happen, they tend to be scam moves just to hunt those liquidations, right? It's not organic spot buying. There's not a lot of activity in the market, but you will see the price go down, and then obviously there's a lot of shorts, people betting that it's going to continue down, and then we get these squeezes to the upside where it just wicks up and then it drops back down just to liquidate all those people. And it does the same up and down. You can see over here to the downside, this was also a liquidation grab, and it just does this over and over and over. So you can see here, just based on the concept from the course, we have this liquidity over here. We put the Fibonacci golden pocket, so that is also a level usually where it pulls into on squeezes and drops back down. You can see this circle over here, a little bit of a fair value gap. And you can see that's exactly what happened as it was trending down. People are betting on more downside. It squeezes to the upside, and then there we have it. So here is what happened after that, and you can see this was exactly just one of those scam wicks. It happens over and over. Here is another good example. Scam wick, pump up and straight back down, and then up again. You can see. But what it did here is it took out these highs. It took out the liquidity that you can see here on the chart, even without knowing those levels. But then having this available to you and knowing that, well, hey, look, the majority of the cluster is over here at about 26.8 or something like that. And if it is just a scam wick, depending on the conditions and what's happening in the market, you could potentially even short that, because look what it did. It hit about 26.8, just over that, and then it completely dropped back down again. So this can help you also not get trapped into taking a long position here after this move up, because obviously if you're watching the chart and that happens, and you don't really have much of an understanding about markets and trading and things like that, for the average retail trader, they might want to FOMO in long after this move up, thinking it's going to continue higher, and then they get trapped, right? It does the same on the downside. When it moves down, a lot of people start shorting here because they think it's going to get lower, okay? So having this knowledge of these liquidation maps, you can use that to your advantage. And you can enter short positions instead of the masses that get wrecked, who do it down here. You can do it at their liquidation level. So let them enter at the lows, see where their liquidation levels are using these tools, and then instead of shorting down here, because you know, maybe the market does continue lower, and the higher time frame idea is that it does continue lower, but then you want to be entering on their liquidation levels, which gives you a near optimal entry, much less risk of getting stopped out if your idea is correct, and then you can continue down and you do the inverse there too. You can take profits into the long liquidation levels, right? There's going to be a lot of people on this move up who are longing this. Their liquidation levels are going to be wherever it is. You can use the maps and the tools to generate that updated information, and then again, you can take profits when you short from the short liquidation levels into the long liquidation levels, and you can use this against them. So if you want to know specifically more about the technical know-how, how this works, the Kingfisher actually have a good technical knowledge and documentation. I will link to this down below the video too, and it explains exactly how everything works, how to read the legends, how it works. You can see here the Kingfisher's unique liquidation maps help you visualize where the hidden liquidity is. When a trader opens a leverage position, it comes with a liquidation price, which once hit will trigger an automated market order to close the position or gradually deleverage when it comes close. Okay, so the Kingfisher aggregates those liquidation prices across the whole market, giving a global vision of where the hidden liquidity and pain points are. And this is where it generates these visual maps where you can see these clusters, and you can use that, like I've explained in this video, to help you get better entries, to help you set your stops, and to also set your take profits into that, so that you basically do the opposite of the masses who are getting liquidated, and you use that information against them to be able to trade and have more profitable and more higher probability trades. Alright, so I hope you enjoyed this training video about liquidation maps and how to properly use them to be able to improve your trading entries, take profits, and stop losses. If you found this helpful, of course, please smash the like button and share it with someone else who would enjoy it. But also, if you are not yet part of my VIP membership, or you don't yet have my intelligent trading course, right now there's still a special offer to get 50% discount through the link in the description below for the next few days only. I would highly recommend, if you do want to learn more about this from me, grab the special offer because it's the best time to get it for the lowest price. And of course, it comes with a full 60-day unconditional money-back guarantee, so you can go through all the training and see indeed if it is valuable to you. If not, you can get your money back within 60 days. But if you found this lesson valuable, there's more than 50 others within the course, and that's continuously being updated. So hopefully I'll see you inside the course. Thanks for watching, good luck with your trading, and I will see you in the next video.